And Rick, your comments echo something we heard from Mohamed El-Erian earlier this week, just the idea that the Fed's probably not going to do anything at this meeting, but they probably should. What would you like to see from them?
Becky, I think that's right. I mean, listen, I think they could start hinting at they can start reducing the tapering program. Right now, the amount of liquidity that's come into the system is extraordinary. I mean, it's quite frankly, the system is too flush with liquidity because not only are you getting the $120 billion a month in from the Fed, but what's happening from Treasury now is you're getting this immense amount of money coming in since February. The total, when you add up the total amount of what Fed, Treasury, you're getting about $1 trillion into the system. And, if you look at in the bank, what happened to the bank earnings, you look at bank deposits are up $800 billion this year. These numbers are staggering. So can the Fed start pulling back? Yes, they can start pulling back. The concern of overheating is starting to permeate the discussion that we're hearing in a number of different circles. So I think the Fed's done a great job. I think the Fed has been brilliant in how they've innovated, et cetera. But I think it's time, particularly liquidity in the front end of the curve. The amount of cash sitting there is just too high right now.
Why do you think the Fed has been reluctant to cop to that at this point? What are they worried about? What happened last time? Are they worried about the economic recovery that didn't take hold as quickly as we wanted 10 years ago?
Yeah, I mean, so there's a couple of things. I mean, look at the virus, you look at variants in parts of the world. We're spending a bunch of time on India recently, and Japan and parts of Canada, et cetera. There is some concern that is we're not through to the end. Second part of it is, are we at maximum employment yet? It is fair to say we've got more to go. I mean, that is the part of the economy that still has more to go. However, what you're seeing, if you were to reduce some of the liquidity in the system, you started a taper. And by the way, I believe you should still support long-end interest rates through the quantitative easing program, but bring down the amount that you're using in the front end. And then you'll still see this growth of employment. The thing I think is extraordinary on employment today is you're seeing job shortages in much of the country. And you look at some of the earnings reports and you see whether it's in construction, whether restaurants that are now reopening, hiring people is really hard to do. So that will continue. And if the Fed starts to reduce the liquidity in the system, it'll have no denigrating impact on that whatsoever. And that's why I think you can begin. By the way, I'm not saying tighten. I'm saying move from emergency conditions that you're at 9 months ago, rightly so, to something that is just accommodative, but with less liquidity that could create some overheating.
So you don't think these are transitory inflation rates that we've been looking at? I mean, it does get a little concerning when you start looking at lumber prices, when you start looking at other commodities like the grains. I mean, there are some big price spikes that we've seen, not only this month, but over this year to date.
So I actually think the Fed is pretty right in their interpretation of transitory inflation. Like you say, you look at copper, you look at iron ore, you look at lumber, as you said, parts of the energy dynamic. Listen, we're seeing an extraordinary reopening. We're seeing inventories that were drawn down. We're seeing capacity that needs to be rebuilt. So I do think you're going to see price pressure. By the way, you look at some of the consumer product companies because of the chemical pass through into their business. There is real price pressure. I think a lot of that's going to get absorbed into margin. And I think you'll see some higher levels of inflation. I think the disinflation we've seen over the past number of years is gone. I actually think the overheating is not so much in durable inflation, longer term inflation. I actually think the overheating is creating, I see this every day in the financial markets. You could talk about SPACs, you could talk about when I look at quality assets that because there's not enough of them relative to this liquidity, what happens is quality assets get richer and richer and people keep buying them and at the wrong price. And that's where I think you can create some pressure in the system. And that's where I think you can get some real overheating.
Shepard Smith here. Thanks for watching CNBC on YouTube.